Everyone, welcome back to the channel. Happy New Year. First of all, we made it to 2021. Thank God. And I know I have owed you guys this mortgage video for the longest time, but last quarter of last year was peak. So basically, I'll just get straight into it.
Yeah, I pull up to the booth, patting a wave. Out here counting the waves, me and my dog.
This video is just for the average person. If you're thinking of getting a mortgage, and how the process works and what you should think about before you begin the process. So I had moved back home in 2019, and so May 2019. Then November 2019, I decided, okay, I'm going to move out the following year, 2020, and I was going to get a mortgage, buy a house, the whole shebang. Now, the first mistake I made was not thinking about how the landscape and the housing market, how much it had changed in like the last 5 years. So I went with the mindset of like 5 years ago. 5 years ago, you could get a mortgage with a 5% deposit. You can't really do that anymore. So the first thing I did was to actually just call my bank. So I called up Halifax. I was like, I'm interested in getting a mortgage. They told me to come in for an appointment. And the first thing they do is to look at your financial responsibilities. The way the mortgage is calculated. So the mortgage is how much they can give you to pay towards a house, and then you repay your bank or your mortgage lender, whoever is lending you the money. So the first thing they do is they see how much you earn every year. So let's take an average of 30,000, which is where probably most of us fall under, plus minus 30,000. Because the thing is, when you go on YouTube, you have like YouTubers who make a good amount of money and they don't have to struggle. So their landscape is completely different from us. So let's say 30,000. What they do is they multiply that times 4, and then they tell you that that's how much they can give you, and then they require you to pay a certain amount of deposit, towards getting that mortgage. So if you were going to buy a house of 100,000, you come to the bank and they'll give you 90% if you were paying a 10% deposit of the house, right? So they tell you that, and it's called an agreement in principle. So the bank says, based on your earnings, we can give you up to 120,000. So if the house was 130,000, you pay 13,000, the bank will give you 117,000, if my math is correct. And I don't think that was correct, but we move on. So you get the idea. Now, something you have to factor in is when they look at your financial responsibility, they don't just look at your earnings, they look at how much you have towards maybe loans, how much maybe if you have a car, how much you pay towards your car. So for example, when I went in, I bought a laptop like the previous month, and I'd done the buy now pay 6 months later. They had to take that into account. They take into account how much you pay if you have an overdraft, for example, how much you will pay every month to paying your overdraft off. So the way that works is, let's say your car is £200, you have a loan that's £100, you have an overdraft and you're paying £50. What they do is they take all of that, they see how much it is you are committing towards those repayments every month. They multiply that times 12. So let's say in the total of the end of the year, it takes you about £5,000. They take away the £5,000 from what you earn every year. So if you earn 30,000, they take away the £5,000, which, because they know you're going to have to make those repayments. Then they tell you, instead of them saying we can give you 120, which was 30 times 4, they will now tell you we can give you 25, we can give you 100, because now you only have 25,000 left from your 30,000 every year. So that's basically how the bank calculates how much they can give you towards a mortgage. Actually, that's how all mortgage lenders calculate how much they can give you. Now, due to the COVID situation, due to the landscape and the housing market changing, Halifax was actually requesting 20% deposit. So they were saying, if you're going to go buy a house of 100,000, we need you to pay 20,000, and then we will give you 80,000 to complete the payment of the house. So the way you can combat this is you looking at mortgage brokers. These are people who have access to the whole market, have access to multiple type of lenders, not just your Halifax bank. So they have done their research. You have whole market brokers as well, so they have more options basically to show you and to give you. And what they do is they just find you better lenders, and who would probably say, okay, we will take you on a 10% deposit, we will take you on a 15% deposit, we'll probably give you a bit more than your bank. So after the bank gave me that option, I went away. I looked at how I can improve on getting, more from the lenders. So basically, the easiest way to improve is you just paying off a bunch of your responsibilities, right? So if you paid off your loan, if you paid off your car, they won't factor that anymore. So you have more options for you to lend. So where it became difficult for me personally was I had prepared 10% deposit, but because of the housing market, if you have a 10% deposit, you have less lenders who are willing to give people a mortgage on a 10% deposit. And if you found some, they wanted you to have a perfect credit score. So because of the whole situation where people have not been able to pay for their house due to COVID, they've just become a bit more strict. Everyone is trying to protect themselves the best way they can, which is fair. So I then got into a dilemma where it was between, do I, try and save up for 15%, or do I improve my credit score? There's a website called Money Saving Market. They have a good place where you can check your credit score and how to improve your credit score. So now what happens when you actually get a mortgage? So the bank tells you, or your mortgage lender tells you, we're going to give you £100,000, right? The next thing you need to negotiate is the length and also your interest rate. So the initial time of you getting the mortgage is, they will tell you, for example, we'll give you 100,000, you're paying 15% deposit. So, and for that, we are going to ask you to pay back over 25 years, which is usually the length they ask for, depending on your age. And you would be paying 3% or 4% interest. Recently, the interest has been very high. It's been between 3.5. If you're paying 10% deposit, if you're paying 15, you can get a good interest for 2.9. So the interest is just how much you're going to, we all know what an interest is basically, is added to your repayment over 25 years. But the good thing about the interest, right, is you can renegotiate after 5 years. So they tell you your length of repayment is 25 years for the 100,000 they're giving you, right? And they tell you for the first 5 years you pay 3% interest. You can negotiate that to be for the first 3 years, and then in 3 years you go back and you renegotiate your interest. The good thing about this is that the market would have probably changed. It might be for the better, it might be for the worse. So you might save more money. Most time you save more money because you would reduce your interest rate. So basically, I'm in that weird place where I'm trying to save more to get my 15%, right? And because increasing your credit score, right? They said that I can't increase my credit score because I don't have my own address, but I'm trying to save to get an address. So I don't understand how, that works, but whatever. So I'm in that little weird position. So I was just really doing this video to just give people an idea. Before you go start your application for a mortgage, I would advise basically, just know how much you want to spend on the house or how much your house is going to cost. So depending on where you live, right, you can just go on, Rightmove, go on Zoopla, go for house viewings. Nothing actually stops you from going for house viewings. Get an idea what you would like, what you would not like in a house, how much the house will cost you. Once you know that, save 15% of that money, pay off as much as you can in your loans, pay off as much as you can when it comes to maybe your car or any outstanding debt you have, right? I would advise not going to your bank directly. Go to multiple mortgage brokers. That was something I didn't do at the start. I went to one, and stuck with it. It's later I found a better mortgage broker. All these housing agencies, that put houses on the market. They usually have their own in-house mortgage broker or a mortgage broker they work with. Talk to all of them. Nothing, they don't charge you for speaking with them. When they do a job for you, they would ask you for a fee. Some of them, it's a one-off payment. So if you come back in 3 years to renegotiate your mortgage, they won't ask you for an extra fee. Sometimes some mortgage brokers take less payment, but then they will take another payment in the future when you come back. So look at other mortgage brokers, then try and find the best deal. Right now, it's better to just say 15% for you towards your mortgage, and then you have to save like £2,000 to £3,000 surveyor's fee, paperwork, all that type of extra stuff that comes with getting a house. When you do get a mortgage, when you've agreed for the mortgage, they will send you a document which will have all the details on it, how much you're going to be paying. I got to that stage where I got the document, and then I lost the house because someone else had gotten it before me, and then the next time it was just I didn't have the deposit to get a better mortgage. So what's in that document, which is basically the next stage, it tells you how much you're going to be paying, which is funny because £80,000 mortgage I was going to be repaying like I think 120 to 130,000 over the span of 25 years, which is ridiculous to think of. So if you have a whole 100,000 to 115,000 cash, dash it towards a house and buy a house. I know I'm saying 100 and something thousand. If you live down south, up north, it's literally that cheap to get a 3-bedroom semi-detached house with a garden, with a drive-through for like 125,000, which I know is very difficult to get down south. For people in London, I think your case is a bit different for those of us up north. So just keep that in mind. But yeah, so that's the basics of how a mortgage basically work. So that'll be my advice before you go in to get the mortgage. Just try and put those things in place so it's easier for you. So yeah, I'm still working towards it. Hopefully this year I get it sorted. I get my place. I'll be very happy. That'll be really, really nice. But yeah, thank you guys for watching. Once again, Happy New Year. I'm not going to promise, but I will try and do better this year. And those of you who have stayed subscribed and not abandoned me, thank you. I love you. I appreciate you guys. And yeah, for those of you who will be new to watching my videos, I hope this really helped. If you want to subscribe, that would be great. And yeah, see you guys on the next video. I promise there will be a next video, guys. So see you guys on the next video. Take care, guys. Bye.